Thank you for being on with us, especially today, especially seeing what is going on with the regional bank sector and the selling not only of the stocks, but of the bonds. There's been talk about short sellers. There's been talk about a crisis of confidence. What do you attribute this to this week?
Well, so the system, just as Chairman Powell said, is fundamentally sound, provided that people have confidence in its soundness. You've got a lot of commentary out there that's raising questions about banks that should be fundamentally sound. And that's principally being driven by their securities portfolios that have losses in them. The Fed can provide liquidity against those securities, and they have a facility out there that isn't getting as much take-up as it probably ought to, and we need to remove whatever remaining obstacles there are to that facility being used so that people have confidence that banks that are fundamentally sound will, in fact, have the liquidity they need from the Fed and to meet their liabilities.
Yeah, I mean, there's been a lot of talk about regulation as well. Regulations that maybe have been rolled back or don't exist, and also the need for maybe future regulations. Here's Senator Elizabeth Warren on CNBC earlier today. Take a listen.
Why was the Fed able to loosen regulations like that? Well, part of that is from the 2018 change in law that gave the Fed the opportunity. But the second part was the culture. It invited the Fed to loosen those regulations. Randy Quarles, you remember him, the Vice Chair of the Fed.
Had him on earlier this week, I believe,
in charge of regulation. Let's go back and play the tapes from him talking about his mission was to change the culture at the Fed so that they were lighter, more hands-off, not looking over your shoulder, and now we reaped the consequences.
So that was actually yesterday, but I want to get your response.
Yes. So the Fed's report itself says that the regulatory changes wouldn't really have made a difference to what happened at Silicon Valley Bank. Senator Warren's cultural charges are without evidence. She doesn't provide any at all. There is, and the supervisory stance that we took at the Fed was you need to be focused on what's important. Obviously, for a bank that has a huge interest rate risk-driven hole in its balance sheet, that's what's important, not a lot of the trivia that the Fed's report shows that they were instead focused on. So there are issues that need to be addressed, but fundamentally what's driving this is not quibbles about the appropriate capital to keep against accumulated other comprehensive income or questions about what level of assets a bank will move from the RBO to the LFBO supervisory category. Those are ridiculous on their face. What's important is that, just as happened with the savings and loans decades ago, we have an inflationary episode that is driving issues on the balance sheet of a large number of banks. We need to have a broad response that can address that. The Fed's monetary policy is absolutely appropriate for the inflation that we're undergoing. The response that can address that, the Fed has articulated a liquidity provision program that, with some tweaks, should be able to respond to provide the banks the liquidity that they need and to restore people's confidence that they will have the liquidity that they need, notwithstanding the temporary effect on their balance sheets of current interest rate policy.
Okay, Randy, trying to bring this home for investors, how should investors digest this disconnect between where the market right now is saying interest rates are going to be and what the Fed is saying about where interest rates are going to stay for a while? What should investors do? Who should they believe and how should they act, do you think, based on that?
So I do think that there will be some significant adjustment over the course of the summer as the market realizes that the Fed is right and they are wrong. Interest rates will need to remain at the terminal rate. And I have believed for some time that this last interest rate increase would be the end. I think that's consistent with Chairman Powell's statements and consistent with the market's expectations. It's just that the market is expecting interest rates to start coming back down again much sooner than they will. And when they come to that recognition, you'll have some probably uncomfortable adjustments over the course of the summer. But you should definitely believe the Fed and not the futures markets at the moment.